Well, the bulls have a firm grip on this market. There's a little bit of a giveaway, about 20 to 25 points from the topmost point of the day, but it's still an 80-point rally, and it is still an all-time high day. Let's look at some more movers and shakers now. State Bank of India, Cipla, and even SBI Life. These are some of the stocks that have managed to find some traction. Titan, by the way, is moving towards higher levels of the morning as well. So these are some stocks where we're seeing additional gains come through. In a bit, I think we should also have Nilesh Shah. I think we have him. We have Nilesh Shah of Kotak Mutual Fund with us now. Nilesh, great to have you with us this morning. And what a morning, right? Because the march simply continues. Corrections are short, shallow, and then, the mountain climbers continue to climb new highs. Your sense on what's going on?
So one, there is tremendous investor confidence among domestic investors. Even when FPIs are selling occasionally, like they did in October, November, or in recent times, domestic investors are showing confidence. No doubt this time the story is backed by fundamentals in most stocks. Earnings growth, as illustrated by December 23 quarter, have been good. Our governance standards are better than our peers, and bearing few pockets of exuberance, overall market is, reasonably well balanced, which is encouraging more participation.
Is PSUs one of those pockets of exuberance, Nilesh? Because I remember in 2023, sometime during November or December, when the market had hit a record high, you were on air with us and you were one of the first people who had advised caution on this space. But the stocks continue to move into newer territory every single day. Is there, if there is any, a pocket of value that still lies within the PSUs?
So there are sectors like oil marketing company which are valued cheaper compared to, let's say, other PSU sectors like defense and railway and some of the financials. But for those sectors to get re-rated, we require some policy initiative. Today, market is not convinced that oil marketing companies will have liberty to price their product. And hence, even when they make profit, they get lower valuation. So some undervalued scripts will require a catalyst to change. For example, oil marketing companies getting clarity on their pricing policy. Overall, we still believe there are few sectors or stocks where floating stock is very, very low. The SEBI's minimum stock holding regulation has not yet applied over there. And hence, with limited buying and lack of selling, valuation and prices both are getting stretched. Those are the pockets where I will recommend investors to be cautious.
Okay. Nilesh, I'm just looking at the numbers, and sometimes you get this fear of heights. Now, if we look at the mid-cap or the small-cap market, at an index level, the indices are up 60% for mid-cap, 70% for small-cap. This year itself, both these indices have put on additional 7, 8, 9%, right? Without what one would perhaps call a meaningful correction or a shakeout in between. I mean, corrections happen barely last a day or so. Does that worry you at all? The mid-cap, small-cap and micro-cap market in particular?
So undoubtedly, we are more cautious today as we go down on market capitalization. As mutual fund, we have completely stayed away from SME IPOs, and that index is up the highest in the world. Clearly, we have lost an opportunity to make money, but our experience does suggest that when money making is so simple, there is bound to be a far bigger concern behind it. As of today, our portfolios are tilted more towards reasonably valued companies rather than momentum companies. Across the sectors, we are carefully watching whether earnings growth estimate priced into current prices will get delivered or not. So from here onwards, it will be fair to say there will be moderation in the gap between returns of large, mid and small. And on a risk-adjusted basis, large cap looks far better than small and mid cap.
Does that apply to large cap banks as well, Nilesh? Because most of the large cap private banks have been underperformers in this rally, including HDFC Bank, Axis Bank. ICICI is doing well today. But in comparison to PSU banks, do you find more value in large cap private banks now?
So in the banking system, asset side, there is similarity. The NPAs are fully provided for across public and private banks. Liquidity is tight. Credit, there's no need to fight for disbursement. Borrowers are lining. Now, what you need is a deposit franchisee, especially low-cost deposits. Those banks who have low-cost deposit franchises are expected to do well in the days to come. This is not about public or private banks anymore because their asset side balance sheet is looking similar. They are all going towards retail lending. They are all going towards, good corporates. What is important or the differentiator is the mobilization of low-cost deposits.
Good chatting with you. Good perspective as always, Nilesh. Thank you very much for joining in when the market has crossed another milestone, another all-time high. You have a good day and we look forward to more conversations in the future. Well, that is the Nifty for you. Now it's actually slipped below that level of, the previous high, which was 22,126. Some profit taking coming in as well. We'll take a quick break on that note. You just heard a local veteran on the market. We'll get you a global view on India as well on the other side. A conversation coming up with LGT Wealth.